This is not financial advice. I'm recording my thoughts about NEO. Previously, I've done two videos about NEO. One when it was trading at about $24 and the other when it was trading at $11. In both those videos, I have determined that it's not a good investment. But currently, NEO is trading at about $7.7 with a market cap of about $13 billion. Their nearest competitor, BYD's market cap is about $94 billion. So NEO is 1/7 of BYD's market cap. If NEO even becomes a $50 billion company, that'll give me a multi-bagger. So in this video, I'm going to talk about NEO's current situation with respect to deliveries and financials. Then I will discuss what to look forward to in the next few quarters and in the next few years. And finally, I'll do a valuation to determine whether it's a good investment at $7.73 or not. In the most recent quarter, they delivered about 31,000 vehicles. And as you can see on the screen, the total revenue was about $1.5 billion. And that represents an increase of 7.7% year over year. And if you look closely, out of this $1.5 billion of revenue, $1.3 billion came from the vehicle sales. But the vehicle sale revenue is actually flat. That actually represents a decrease of 0.2% year on year. So how did they grow 7%? That's because of their other sales, which grew 117.8% and contributed to $211 million of revenue this quarter. This other sales revenue is attributed to their sale of accessories, provision to repair and maintenance services, provision of auto financing services, sale of used cars, provision of power solutions, etc. Gross margin in the most recent quarter was about 1.5%, which is not a good number. And the loss from operations was about $744 million in one quarter. And net loss was $690 million. NEO has about $5.5 billion of cash equivalents, short-term and long-term deposits. So this cash burn rate of $700 million per quarter will let them survive for another 8 quarters. So that's about 2 years of runway. Overall, the results were bad in the most recent quarter. Now let's look at their business outlook for the next quarter. NEO is planning to deliver between 23,000 and 25,000 vehicles in the next quarter. And based on their previous promise of more than 200,000 vehicles this year, this guidance is not good. The total revenue for the next quarter would be in between 1.27 billion and 1.37 billion, and it represents a decrease of about 15.1%. So the outlook is also not great. Let's look at NEO's future plans. Most recently, they are launching ES6, which is expected to increase their sales in the coming few quarters. And NEO is also working on 2 sub-brands, Firefly and Alps. And with respect to Firefly brand, I'm seeing conflicting information on the web. One of the articles says they're planning to launch this Firefly in between 13,600 to 27,200 euros. But another article is suggesting that the starting price would be about 30,000 euros. But I do not know whether this includes the battery pack or not, because when they sell it in the Europe, they're also including the battery pack within the price. But when they sell in China, they have the option of excluding the battery pack. So at the moment, it is still not clear. We have to await the official confirmation from the company. While the launch of low-priced sub-brands is exciting, it is also important for us to understand that just because they launch the models doesn't mean it's going to sell. We have to wait for its actual price tag, its specification, and how it competes with similar models launched by their competitors. In addition, the lower-cost sub-brands have less gross margins compared to the luxury vehicles. So we'll have to get those numbers in 2025 to determine whether it will have a positive effect on NEO or not. NEO is continuing to invest in the battery swapping stations. While battery swap does have some benefits, in my personal opinion, it is not at all economical. Unless all other automakers adapt to this battery swap technology, it does not make sense economically. Let's now move on to the valuation to determine whether this is a good investment or not. As usual, I'm going to provide 2 cases, one with reasonable assumptions and one with great execution. I take my investment decision based on the case with reasonable assumptions. In 2022, they made about $6.9 billion of revenue, and I'm assuming an estimated growth rate of 20% in the next few years on an average. Note that in the most recent quarter, they could only grow their revenue by about 7.7%. And in the second quarter of 2023, they're projecting a decrease in revenue. So I estimate that this is going to continue for the rest of this year, and probably it will improve next year. So 20% revenue growth on an average for the next 5 years also takes into account the sub-brands offerings, which will start by 2025. So I want you to understand that 20% is a reasonable assumption. And with that, they can make about $14 billion of revenue in 2027. With respect to the net profit margins, I'm assuming 10%. Please note that this is not the gross margin or the vehicle margin. It is the net profit margin. For example, Tesla could achieve about 17% net profit margins based off of 30% gross margins. Tesla could do that because they have vertical integration. They do their production at a large scale in the gigafactories, so they have the advantage of scale, and therefore they can get close to 30% gross margins and close to 15% net profit margins. But NIO doesn't do the vertical integration, and by 2027 I don't think they can achieve scale yet. So that's why 10% I think is reasonable. It is still hard to do, but I think NIO can do it. With that, the net income for 2027 would be about $1.4 billion. For a company that's growing in the 20% range and has a net profit margin of 10%, a typical multiple would be about 15. Even though NIO has a lot of competition, they are still in the growth mode in 2027, so people will pay a premium. That's why I have assumed multiples between 15 and 20. So with that, they will have a market cap ranging from $21 to $29 billion in 2027. With respect to the number of outstanding shares, NIO is slowly diluting the shareholders. Currently, they have about 1.69 billion outstanding shares, and I'm assuming 2.5% dilution in the next 5 years, with which they will have about 1.977 billion outstanding shares in 2027. That's an increase of about 300 million outstanding shares. We do know that auto business is a capital intensive business, and NIO is still in the growth mode, so they have to make a lot of investments. Currently they have about $5.5 billion, which is good for 2 years, but after that they will run out of cash and they need to raise some. I highly doubt they would take a debt at a high interest rate. In my opinion, they would go with the dilution. So this 300 million share dilution at $7.7 price would give them about $2 billion of cash. So I think 1.977 billion outstanding shares by 2027 is actually optimistic. They could dilute us more, but I'm going to assume that 2.5% dilution for the next 5 years is a reasonable assumption. With that, the stock price would be between $11 to $14, which represents 40% to about 87% gain with respect to the current price of $7.7. This is not at all attractive to me because there is a lot of execution risk, and we're also dealing with a Chinese company. So 40% to 80% reward is not good enough for me. Now let's look at the great execution case. I'm assuming 30% year-on-year growth, which will get them to a $20 billion revenue in 2027. This is very hard to do in my opinion. Unless their sub-brands become a huge hit, it is almost not possible to get to this 30% growth rate. And with respect to net profit margin, I'm assuming 15%. I'm assuming that NIO will become very, very efficient with respect to its operating costs. So remember that 15% net profit margin is like Tesla's net profit margin. And I want you to clearly understand that this is not vehicle margin or gross margin, it is net profit margin. 15% net profit margin for NIO is hard to do by 2027. So they can make about $3 billion of net income in 2027 with great execution. And I'm giving a multiple ranging from 20 to 30. With these multiples, the company would be valued between 59 billion and 89 billion. I'm going to keep the dilution the same. With that, I'm looking at a share price between $30 and $45 in 2027. This represents a gain between 288% and 482%, which is extremely attractive. And by the way, this is based off of $7.7 current share price. In conclusion, I make my investment decision based off of the case with reasonable assumptions, where I'm projecting a gain between 40% and 87% in the next 5 years. This risk reward is not attractive to me, and therefore I will not be investing in NIO stock. On the other hand, if there's a neo bull who actually believes in the great execution case in which they can get to 30% growth rate year on year for the next 5 years, achieve 15% net profit margins, and get a multiple between 20 to 30, then this seems like a multi-bagger with 288% to about 480% gain in the next 5 years. Let me know your thoughts in the comments. Thank you so much for watching.